This is just going to be a short little continued update scan after yesterday and the earnings reports we had, right? So, yesterday I discussed, FOMC, Meta, Microsoft reports after hours yesterday, and then today we have Amazon and Apple, and the relevance behind those, right? And the liquidity that's generated and the volatility that stems from events like that, where, a lot of money moves, a lot of buying and selling happens, whether or not it's for a specific reason. That's up to your interpretation, but it sparks a lot of volatility, right, and liquidity, and there's an opportunity for these events to spark hands to change, right, to spark those counterparty fills and whatnot. And in my opinion, that's exactly what we saw and are continuing to see, right? Um, we obviously, have a really ugly Tuesday candle, right? I discussed that, the massive kind of gap up and failure, lack of a true structurally sound bid. Um, and really ugly daily candle closure on a little bit of volume backing that. We have the Fed meeting yesterday, right? We don't really have much of an initial reaction, and we see a little bit of a pop into the Powell speech, where that kind of catalyzes a quick markdown prior to these reports, and then a strong close, right? So, what I kind of see here is just more than likely a bid buying this lower, right? A bid bailing, bidding it lower into these reports, right? Quick little shakeout prior to these events, and then we have to see what happens after that, right? And obviously we have, a really nice $5 gap up on SPY, that's immediately faded, right? We have a really ugly hourly candle and following hourly print that fades 0.5%, right? We have, a lot of names giving you really ugly looks, and a lot of volume behind. I mean, this 3/4 of the three-fourths, 3/4, I guess, of a percentage sell off from the Powell speech, and then the kind of stronger close and gap up where we have there's a lot of, liquidity that comes off of this, right? There's a lot of liquidity that is generated by the Powell speech, and, a potential for that buyer to just bid it lower into these reports and then offload their inventory to some extent, if you want to think about it like that, right? I kind of do to some extent. But either way, we now have this gap up. And what I'm seeing on this gap up is really nothing that strays me away from my short side thesis, right? We have, we're $1.50 above Tuesday's high, where we saw that really aggressive seller kind of show his hand off the open. We're $2.50 off the QQQ highs, where we had that volume backing that sell off as well. And the same kind of thing that happened on Wednesday, right? In a very aggressive, 1% gap up, a little bit more than 1%, and an immediate breakdown with a good amount of volume backing that, right? So there's still absolutely nothing that is appealing to me alongside. My thesis is still structurally intact for the short heading into next quarter and next year. And there was an opportunity on the draw into the peg, the weak pop on very diminishing volume, and the exhaustion at the opening print on SPY to trade this further in the overnight gap, not peg. That's a good opportunity for an intraday move. Same as well with QQQ as far as this lower high goes. I don't mind that. That's really the only internal opportunity I kind of see. And then if you want to cover a good amount and maybe re-short this, if we see, kind of weak structure and low effort from these buyers and more or less mitigation into this 15-minute orb that we have here at 638 or like the 0.5. That's not an issue at all, right? I think that was a really good intraday short. And my thesis is still intact, right? We have Pep failing into the peg. I don't mind this. I think this sets up a really clean opportunity again, but not yet. There's no edge here. Nike, I want this to sweep the gap as well. I think this is a good sign of an exhausted bid and kind of a last hurrah and a trapping of late buyers. It's just nothing has changed, right? We have Nvidia. We have a gap up that is, like I said, failed, and a ton of volume backing this, right? And it just aligns with my thesis. We have the same thing on Tuesday to some extent. This is a little bit more aggressive of a gap that's faded. Nothing has changed. Nothing has changed. Tesla can still be clean. I don't mind the Tesla long. We took out yesterday's lows and have a good amount of volume backing those. Lows being taken out, but no subsequent structure developed that's super appealing. But this is a nice kind of internal higher low within this peg attempt and sell that can push us to the full fill. We have AMD exhaustive top being put in potentially on a very aggressive influx of volume, and another gap up that's faded. We have the Apple and Amazon reports after hours. We have a potential footprint loading on Microsoft. Here's the thing, guys. It doesn't have to sell off on the report, right? Something like this is completely fine and viable with my short-sighted thesis on his name. I don't have an execution. I don't have an opportunity that I want to take and put money on. But this right here is a gap up that traded you 22 cents above the highs and immediately faded with a lot of volume backing it, right? This is a disgusting candle, and we're now really not seeing any structure behind the buyer that is in this peg. So that's a pretty pivotal thing to note. On Microsoft, Meta as well, we're $30, $40 above the previous highs. Um, I don't have much of an edge on these names except for the confluence that I'm still confident on, except for the conviction that it's still there that I think these revert at minimum into the gaps that we left behind from the May 1st gap up, the April 30th report after hours on that day. There's still conviction behind that. I don't have an opportunity to execute on these. So the gap ups are completely fine, right? Like, it's not straying me away from my conviction. If anybody says so otherwise, then they're fucking stupid. This right here is a completely viable and a completely viable short still, in my opinion, on the broader equity risk on market. There's nothing that has strayed me away from that conviction and that thesis. And I stand on that. We have some gap ups, and I'm not surprised that we're seeing this on Microsoft. I would like to see how Meta develops, up 12%. But if we continue to see these exhaustive looks on a binary event like this, I mean, we look at NVIDIA, we look at the earnings report on NVIDIA in November, it generates a lot of liquidity, and this was that high that was faded on the 7th, but this resulted in like a 15% decline, right? 17. Like, these events bring that liquidity in, offer that counterparty fill, especially on reports that, if I'm not mistaken, looking at the numbers, were very good for these companies. This can generate a lot of hands to change, right? We have Google as well. I don't really like Google. I do think that this could revert to the full gap fill at 206. A lot of volume off the sell-off open. If we reclaim the 193 spot, this could push to 206. This is not as good of an opportunity as it was down here and here and here and here. So not really much of an edge that I like, but maybe a little bit more reversion left on this Google chart. It's just one of those things, like I said, continuing to react to what happens, right? You can't predict that Microsoft is going to fail on a report and bring the whole market down. You have to react to what's happening, and as long as your conviction is still there, you have no issue with that, right? My conviction is still there for a SPY short-sided trade on 2026 quarter one expiration to 600, 580 to 564 within a year. My conviction is still there on that. I don't have a lot of conviction on an intra-week, intraday opportunity here, minus this opening print failure for a further draw into the overnight gap at all this week, right? There's not really any opportunities I saw this week, especially, with the binary events on Wednesday and then the reports after hours on Thursday today, that I had a lot of conviction behind. So I have no issue with not really doing much internally this week, minus like 2 or 3 trades if you want to take that short. That MO IV flush was pretty clean as well, where this was a pretty coiled range and we opened up right at a pretty big spot and just rallied into the gap fill from 2018 on a pretty clean move, right? Like, it's obviously it faded aggressively after, but you have to understand what happens and why with these earnings events. We have MAGs as well, pinning it right above the previous all-time highs at 58.69, but this is already backing a massive gap up that's being faded, backed by a good amount of volume. This is a good amount of conviction for my short thesis as well, when we have MAGs very exhaustively rallying to new highs and then seeing this gap and crap to some extent. Like, it's still holding a lot of conviction behind that short thesis, in my opinion. I do think Tesla could be a good long, but that's, we have to understand this is like an intra-week move to 332 maybe next week or something, when those Vanna Charm flows return for the month of August. So my conviction is still there. I think MAGS looks really, really hideous. We saw the kind of inside bar put in on Wednesday, yesterday inside the confines of Tuesday's print, and then pretty aggressive gap down today's session, down 1.4% on SMH. Nothing there yet. Cracking under 283 is when things get a little extensive on this name, in my opinion. We saw a gap down. We saw a pretty notable failure on yesterday's print on XLP. which is fine, especially when we have these tech names gapping up. We're going to see those risk-off names kind of be a little stagnant or underperform. Maybe taking out these lows will be a good spark for some liquidity and some hands to change underneath these lows that we've developed at $79 range within XLP, but not really much of an edge yet on a lot of these names, like I said. So just a quick little check-in. PNW getting absolutely railed. What an ugly and hideous weekly chart. Just a quick little check-in, right? On the opportunities that I saw this week, they're very minimal ones, right? I like that short off the opening print, but you have to cover it in the overnight gap. Q's was a pretty good one if you want to take this, right? This is actually a pretty good trade if you target the full gap fill of about a 5 R to R. If you 3.5 risk to reward here, risking about 0.25% for 0.9% return. This is a pretty good short, but you have to cover as we pull into the overnight gap, in my opinion, right? So my broader short side focus is still there. We have some gap ups off these reports that are being faded. There's a lot of high conviction behind it. I honestly prefer that over like a big miss on these earnings reports because it's opportunity for those hands to change, like I said, with that spark and influx of liquidity, right? And seeing the breakdown off of the Powell speech into a strong close prior to these reports is a little bit concerning if I were to like take a short position into those reports, which I would never really do. But a good amount of conviction behind the shorts still there. I think there was a good intraday move here, but now it's not really developing so cleanly. And my eyes are glued to this Apple report, right? I honestly would not mind a 7% gap up to 224, 225. I think there's a lot of conviction behind that range, and this is something I'm really going to be gluing my eyes to, as well as the report that we have after hours on Amazon. If we pull up to that 240 range to fill these gaps that are left behind from the February report and the February 5th overnight gap. So quick little check-in, right? There's nothing that has strayed me away from my thesis, that positioning that I like. And then, we have PAP, obviously. There was not really much of an edge here. I didn't really like how this was developing. A further draw into this peg is much more appealing to me for a long-sided trade, especially on options. I don't know. There's just a quick little 15-minute video discussing why these gap ups are not straying me away and why my eyes are kind of glued to how these develop after. And if this develops a massive footprint on Microsoft, that's a big red flag as well. I'm going to see how Meta closes out also, but it's going to be pretty interesting to see how these daily candles close, especially like on an NVIDIA where we saw a pretty notable seller on Tuesday, a relatively stronger close on Wednesday, and then a gap up that is kind of being faded now, at least at the moment today, right? But we are seeing some reversion off the overnight gap fill. There's just no structure or viable opportunity that I like within these names as far as like an intra-week move quite yet, right? When that hourly and daily structure develops is when we get pretty aggressively focused short side, in my opinion. But still not a good look, right? So I'm still confident in this. You just don't have an opportunity to execute internally so aggressive. That's why this is a much broader thesis and why this is leading into Q4 of next year as far as my short side focus goes on these names, right? It's just no opportunities for really slamming those shorter dated options, right? This is a commons trade on inverse leverage ETFs. This is a share options trade on 2026 January or March expiration on SPY. So, and QQQ as well, I think is pretty viable. I think we see a 6% decline in August on all of these, 6 to 7% on SPY and QQQ, and that gap left behind from the 24th. But there's nothing really there yet for me to really execute aggressively on like August expiration until we see like a really structurally sound lower high to take us to 550. So really not much to discuss except for why these reports don't stray me away from a lot of short-sighted thesis, my short-sighted thesis, and why I'm still confident in that, right? We are now currently stalling at the high of day from yesterday and the FOMC reaction initially, right before Powell, and that 15-minute orb that we based and broke down under. So right now, this would be a pretty good short, in my opinion, if we can continue to see some aggressiveness and effort put in by this seller. Repinning it under this previous kind of breakdown that we established under the 15-minute or hourly orb, initial hourly low, right? And we're now seeing that really weak volume, that really lack of an aggressive effort from a buyer and more or less just patience waiting for that seller to show his hand again, right? We're now kind of seeing that develop, in my opinion, for a potential roll on this short, right? Where you shorted it, covered it, and now you can roll it again to the full gap fill. So this is developing an intra-week move, in my opinion, or intraday move, in my opinion, if you want to take this on like next week expiration. If we continue to see some effort from a seller within this range, because we haven't really seen some aggressiveness behind this buyer, but you have to be pretty cautious with these intra-week moves. There's intraday moves. There's not such an edge quite yet, but this is potentially developing right now, actually, off of yesterday's high, the FOMC high, and the 15 or hourly orb low, in my opinion. So yeah, I mean that's pretty much it, right? Good short off open, good short potentially developing now. Nothing I'm really too aggressive about. I don't think it's much of an aggressive or much of a good opportunity to take intraday moves when we're in price discovery on these indexes and these Mag 7 names, just because of the fact that it's harder to have an objective risk and kind of a reward to some extent. But the broader short focus is still there. I like these gap ups being faded, and I'm pretty interested to see how these develop going forward, especially, if this can continue to fade a pretty pivotal spot. You can take a pretty objective risk at 638, targeting 633, 634s today, right? If you feel like it, and roll some profits from the earlier short of today's session. So I don't have an issue with that, especially because we're in the golden pocket range on SPY is probably my preferred vehicle, just because of how nicely this is potentially setting up for a full gap fill. But you also have to be notable, and you also have to note the potential for this to not be ready for an intra-week or an intraday move, and be patient, waiting for those opportunities when the structure is better and when we're not in price discovery, right? When we've developed an hourly like last point supply, because I do think that this is an hourly distribution that will pull us back to $600, but there's not such a clear hourly look, right? That's why I said the January position is viable. If we break down to 626, see that buyer is wiped, and develop a lower high, you can take a pretty clean trade down to 613, in my opinion. Maybe 600 if you're a little aggressive. 626 is kind of the line in the sand, though. At the current moment in time where we saw that seller broke and then base on the 22nd, we don't have such an aggressive opportunity to trade like August expiration quite yet. There's maybe an intraday move setting up, like I said, and a move that's setting up for a 2026 focus as far as expiration goes. But waiting for that internal micro structure to develop is pretty crucial before you get aggressive on shorter dated options, because you're playing against time and volatility, and you really want to time that correctly. But this is setting up really nicely, in my opinion. So it's just a little update. Excuse me. Still confident in the short. Still waiting for it to set up on an internal structure. But potential for a good couple of intraday moves here, covering, and then waiting for the Apple report to potentially be a catalyst for sparking that top, which it actually was a pretty big proponent for the top in February when we had this gap up off the report failure, faded about 10% from the highs, 9% from the highs off this report, and then drew back into that range on truly no bid and failed that high as SPY faded the all-time highs and exhaustion into expiration and February expiration. And NVIDIA gave you that kind of mitigation and reversion into the gap from the DeepSeek gap down 17% session, where we saw that lack of a true bid, diminishing volume, no true effort, and the result not matching that effort, more or less being caused by the movement under the hood and the draw being to the full gap fill, where we then saw that seller show his hand in the February expiration of the February report. So still confident on the 2026 short exposure, still confident in a short-sided trade setting up, still patient, waiting for that opportunity, still not really that confident on an intraday or intra-week move as far as slamming the table. Still waiting for that, right, and focus on Apple. So quick little recap, right, on what I'm thinking about here. MasterCard gap up off the report. We're now drawing into this June 13th gap down that we have left unfilled and potentially failing these previous highs that we had established in quarter one of 2025. Still confident short. You can maybe take a couple intraday positions throughout this session. There wasn't really much that I liked off FOMC or anything, that was really had a lot of conviction behind it into this sell-off, especially leading into these reports. When you see this massive breakdown and truly strong close, it's a little bit of a red flag for positioning short side into those reports. But we see a potential failure on these earnings reports, which is pretty pivotal and pretty notable as far as sparking those counterparty fills. So yeah, pretty much it. Just a quick little discussion, right? But nothing has changed my conviction, and I'm still waiting for an intra-week, intraday move. Although we do potentially have one setting up right now. So yeah, be cautious, be careful. I think the short is still setting up. I don't like any charts long except for maybe like a Rivian and UNH underneath that footprint candle, but there's nothing structurally sound about this name just yet.